Buenos días a todos y muchas gracias primero a Luis Felipe por invitarme a participar en esta sesión, a Gloria por traerme a Chile otra vez, que es siempre un placer. Voy a hablar en inglés porque después de la intervención de José solo haría el ridículo, porque ya me he olvidado de cómo se habla en castellano en algo profesional después de tantos años en Frankfurt. Sí que quiero decir una cosa solo antes de empezar, y es que la ventaja, yo he estado pensando ahora, bueno, ¿hablo de la historia o del presente? Y la conclusión es que la Unión Europea y el Banco Central Europeo solo tienen 25 años, así que da casi igual hablar de la historia, porque uno habla de la historia, pero habla del presente. Es la ventaja que un Banco Central histórico como Chile, con 100 años, tiene sobre nosotros. Bueno, to start with, I would like to emphasize one element that was in Bert's presentation this morning. He said about central banking is about getting data to do better or critical decision making. And this is something I would like to stress very much. We don't produce statistics at the ECB for the fun of getting data to the IMF, to Bert or to Bruno in the BIS. That's very important. I'm not saying it's not very important, but that's not why we are collecting or producing our data. Our data are produced so that Madame Lagarde and previously Draghi or Trichet were able to make the right monetary policy decisions and to guide the euro economy and the citizens of Europe where they belong. So that's something I think we should stress and not forget. I hope. Oops. Here. Yeah, here. And this is the pointer. Pointer. We don't have pointer here? Okay, good. Anyway. Okay, then, so what is important to, or what I would like then to come in is to explain how the global crisis, and I think Patty was alluding to that in her presentation, how this enacted as a game changer in the ECB as to the statistical toolkit that was needed to help the monetary policy decision making at the bank, and to make sure that the ECB could continue the governors to make the right decisions. And here it's basically in two areas where we have found out after the crisis that we were lacking information. One was we didn't have information on credit risk and also market risk. And for that we have developed some statistics that now help us to manage also that risk and to help out in the process. Moreover, in these 25 years of short history of the European Central Bank, we have not only been responsible for monetary policy, but recently we have enlarged our list of responsibilities to also cover banking supervision and financial stability. And that has triggered also more need for granular data, because those areas, credit risk and market risk, are very critical if one wants to maintain them properly. So, in this context, so it's very important that the support of the critical decision makings for the ECB Governing Council are sustained also by giving the ECB a lot of legal powers. So the ECB, different to maybe other central banks, has the power to collect statistics, legal power to collect statistics. And for that reason, we have to also make sure that, that we are keen on getting all the data that we need to make the decisions, but also being very much concerned and cautious about the reporting burden we impose on the different reporting agents, mainly on banks. But from there, from banks and the financial institutions, we are entitled to get all the information that we need, in order to manage our policies. So, in terms of history, I will just before the crisis. So the ECB, as I said, started in 1999. If we take the first years of the monetary union until we had the financial crisis, the global financial crisis, that was with Lehman, was falling in 2008. There you see how inflation was relatively easy to manage. So the inflation target of the ECB is 2%. So our monetary policy has to ensure that our inflation target is around the 2% in the medium term. And this was relatively easy to manage. And during this period, our monetary policy implementation was relatively easy. So we only needed we managed it in the traditional way or orthodox way, if you want. We only needed to have our weekly auctions for liquidity to the banks. The banks will tell us how much we calculate how much was the structural liquidity deficit in the banking system, usually caused by what's called autonomous factors, usually banks in circulation and government deposits. And with that, we were giving in our weekly auctions to the banks the liquidity they would need it. So all was very easy to steer that our policy rate was reflected in the market rates at which the banks were trading. So this is the situation as was at the time. And therefore, we were, let's say, easily monitoring the situation. But now, in these conditions, what is important is you don't need so many statistics to manage the implementation of monetary policy. You only need statistics or data to make the decisions on monetary policy. The decision is what is your official rate at the bank. You increase the rate because you see, I don't know, inflation is growing, or you have, for those who have also the GDP in the decision making, you then meet in the governors every 6 weeks and you decide, oh, we need to decide to lower the rates or increase the rates. And then you decide what you do with the official rates. That's decision of the rates, but that's not about implementation. Then you have to make sure that in the markets, really the official rate is the one that's traded. Otherwise, you have problems of the fragmentation. So, but in those, let's say, the all good days, we only needed information for decision making. Then the so-called traditional macroeconomic statistics were very sufficient in these early 10 years of monetary union. So we were looking at the monetary aggregates, basically the growth of M3, statistics very much loved by Bruno. He's not now in the room, but he's a fan of that. And then, of course, we developed a bit later on the integrated financial and non-financial accounts for the euro area. This we were calling the second pillar. So there what we were looking is at the money holding sector, so the household sectors and the non-financial corporations, what were their consumption, saving and investments, and that helped us to see whether we need to increase the rates, we need to decrease the rates, and then from there we move. Also balance of payments to see whether we were having external shocks that would allow us or force us to do some let's say, intervention or some decisions in terms of monetary policy. So that's the situation by now. But then, with the crisis, everything changed. In 2008, of course, we had the crisis created by the subprime base. You may remember that this was a total collapse on the normal functioning of the money markets. There was, of course, the mistrust in these asset-backed securities that were so popular. And this was because there were intransparent portfolios behind that, so you didn't know what was the quality of the loans beyond. So the ABS had a AAA, but then the loans were very poor, what was sustaining this. Then we had a bit later on, more or less 2012 in Europe, the sovereign debt crisis. So the rating agencies started to decrease very quickly the rating of our government debt. You know that in Europe we do not have a fiscal union, we have a monetary union, but not a fiscal union. So every government in the area, we have 20, has its own sovereign debt and has to maintain a certain credit for that. And then, of course, this was creating, you may remember the Greek case, whether Greece was going to leave the euro or not. There was this discussion at the time. And then, of course, there was the liquidity crisis a bit later on, the COVID crisis, where, of course, there was limitations to the movements of persons and goods and so on that created also a lot of stress in the market. And more recently also in 2022, the supply and demand shocks also linked to the Ukraine crisis, energy and food. There was no shipping industry moving around and so on and so forth. So that was showing us very clearly that from there on, the only problem was not just to decide on which rates we wanted, but also to make sure that the implementation of the monetary policy was really moving in the direction we wanted, and that we wouldn't have, 6 governors meeting every 6 weeks deciding on a rate, but the market then trading a different rate so that you have different costs for the companies across the different countries in Europe. So that made us very clear that we needed to increase our toolkit, and basically what we needed in order to, let's say, provide an answer or to be more efficient in responding or helping this to make sure that we do a proper monetary policy implementation was to go for data sets that cannot be just extension, new breakdowns on the balance of payments or new breakdowns on the financial accounts. We needed a different kind of information. We needed information that was coming much more quicker, not real time, but daily at least in some cases, certainly monthly. And then it must be more granular. Granular, why? In order to capture fragmentation, so whether the problems were having problems in companies or in countries or in sectors, not just deciding about the euro area as a whole. Also to anticipate contagion, so whether somebody is having a problem, whether this will spill over to others. We had now responsibilities for financial stability. And then, of course, also information to design and monitor what was going to happen in the money markets. For that, we started first to collect information on develop new data sets that will provide us with information on credit risk, because what were the questions that we were getting in 2008 and in statistics when Mr. Trichet, at that time I remember, was calling us, we didn't have an answer. And that was very embarrassing. Question he had was, oh, Lehman Brothers is collapsing. What will be my losses? The losses of the European Central Bank or the Eurosystem, if you want to take the older central banks. Oh, that was a very difficult information. We didn't have the information by now, so we had to identify what were the icing codes for Lehman Brothers securities traded in the market, how much of that we have, how much of that will be the money that we are losing. Other questions there were, well, what you see here, if a company is falling down, or you know, if Credit Suisse fails, for example, who is hit? Which are the banks that is Banco Santander going to collapse if this Credit Suisse is falling or not, or by how much, or what is the total exposure by the countries, by the banks, by the sectors? So all these sort of questions we were not able to answer. There was also a question I put in the example United Airlines, but you may remember Evergrande is a Chinese, I think, real estate developer that was falling. We got the question, oh, how much is then the exposure to Evergrande in our banks, in our system? Is it going to create a spillover? Are we going to have really big problems? Do we have to then do something in the system? Here, more sort of the question. So also in the monetary policy area, it's not no longer, as I said, the decision, fine. It's just we decide to lower rates. But how do we make that, if we want to then have a problem because we are going to inject a lot of money in the bank in order to support the liquidity, but if the banks do not have collateral, we need to enlarge our list of collateral. If we want to accept, for example, loans as collateral, do we have a list of loans? Do we have a register of loans, or don't we have it? And then we cannot implement any of these. Or if we want to give the money, but they give the money in different conditions to the banks that will translate it into new loans to small companies or medium companies or big companies, do I find this in my banking statistic? No. You don't have this breakdown in the banking statistic. And it's rightly so, because otherwise it will be too complex to ask the banks to provide this information in an aggregate manner. So all these questions we were not able to answer, so not very good for statisticians. So we developed then this system, and I think the acronyms Patty was already using in her presentation. I will not use the acronyms here, but basically what we built is databases that collect basically all the information on the loan by loan, information of all the, let's say loan by loan, all the loans that banks have given to legal companies in Europe. We register that. On the securities, we have both the total let's say, security by security issuances that are traded and managed in the euro area, and also on the holding side, all the holdings by sector and by banking group, who is holding the securities that are issued. And then, of course, a register was called RIAD, was mentioned there, where we have all the details for the companies that are located. So we have information about the size of the company, the direction of the company, so you can then do physical risk calculations whatsoever. You have even whether it's the parent company or the mother company, so that you can have group exposures in total. And these will link through the different identifiers. For example, you have an issue of security, you know the ISIN and who is the issuer, and for that you go here, you know then if it's issued by a large enterprise or by a smaller enterprise, and then you connect it with the loans. You see whether that company has also loans or not, and with banks. So you make a complete closing of the circle for that. This closing of the circle then provides us now the quick answers that we needed. So if Lehman Brothers collapsed, now we will be able to tell when Credit Suisse, and this is not a non-real example, Credit Suisse, we got the question and we were able to answer in half an hour to Ms. Lagarde, don't worry, the exposure is small, even if it falls, there's no big banks affected and we will not be damaged, when these 81s of the Credit Suisse were at stake. Also in Banco Popular, a Spanish bank, was also in difficulties, to say the least. Then we saw that a significant proportion of the debt was held by the Spanish households, and then we thought better to make a solution whereby another bank buys it as a resolution rather than let the bank completely fall, and then a lot of, let's say, Spanish poor households will lose all the investment because nobody's going to give back the money they have in bonds issued by Banco Popular. And this database is just a screenshot, and I will not extend very much, but here it's very easy. It's a very user-friendly information. We have even presented it to Ms. Lagarde. So even for that level, you only need to type the name of the bank or the name of the company, and then you get all the information. What are the debt that the company has issued? Who are the creditors? Who is the banking groups that are owning the securities? You have even a small map where it tells you already who are the most exposed, and so on and so forth. So very rich information that I'm not going to enter into detail, but it's very also easy to handle. And then, of course, for very much important uses of that we have is that, of course, you see here from 1998 to 2008, very easy monetary policy management through a corridor, lower bound, and our monetary policy rate was close to the yellow line, so that was the official policy rate, and then we were monitoring that everything was there. Then, of course, after the crisis, the banks were in trouble, nobody trading in the money markets, nobody borrows any bank money in the money market, and then the ECB have to come to the rescue by injecting money. First, in this first year, we did it basically with refinancing operations, long-term refinancing operations, and then even 3 years operations, which were floating the liquidity. And then, of course, it's the blue line then, what has begun from 2008, our policy rate. So the official policy rate is not the main refinancing operations, the yellow line, but the blue line, the deposit facility, which is the lower bound that we have set by putting a lot of more liquidity that is needed because the banks otherwise would not trade themselves in the markets because there were doubts about whether if I borrow money to the other bank will go give me the money the day after. And in that respect, of course, this required then in 2017, and then later with the crisis, you see the block in gray is this huge increase in asset purchases, the famous quantitative easing that somebody was alluding to, where these also require information about what we were doing in these all scenarios. And with that information that we have now, we can help the process of implementing. First, let me go to the graph on the left very quickly. This tells you we are able to know how much of the total bonds circulating are in the hands of the central banks of the euro area. And then you see that even in the peak, when we were doing a lot of asset purchases, we managed to even buy or have in our portfolio 40%. So 40% of the total bonds circulating in the euro area, government bonds, were held in the portfolio of the central banks. This is huge. You create then tensions in the repo market because, of course, if all the government bonds, which are the basic for the repo market, are in the hands of the central government, then you create tensions in the money markets. And moreover, you also have the problem that you are forbidding the banks in order to get money from the central bank, they need to bring government bonds in order to guarantee the operation. If there's a scarcity of bonds, because all the bonds are already in the hands of the central bank, you need to increase the portfolio of the securities or assets that you allow as eligible for monetary policy operations. Thanks to AnaCredit, we could add the credit, the loans, the credit claims as collateral that the banks can bring also in order to get funding from the ECB. So that was then possible because of the information in AnaCredit. And during the long refinancing operations that we were including there, as said before, we were able to help them by permitting the board. The board has asked us, can we do different terms and conditions in the borrowing in the long refinancing operations to the banks if the new loans are given to small or medium enterprises? That we couldn't do with the banking statistics backed with AnaCredit, we could. And we said, yes, the board, you can establish different rates so that when the funding goes to small and medium enterprises, they can get maybe penalized lower in the cost, and then the operation was more beneficial for them, and we were supporting more. This means that now we are having a discussion about what will be the future mix of the policy in the ECB, whether we will have lending operations, asset purchases. Asset purchases was more or less an anathema for many years, but now with the quantitative easing has ceased to be a case for that. And we are discussing now what will be the way to liquidity, asset operations or lending. And this is something we are reflecting, but we have now the, let's say from the statistical side, all the data that we need in order to support the implementation. Also, maybe another example I'll try to run because I know I'm a bit overdone with the time, but I think it's still interesting that at least we go through that. During the dry down of the markets in 2008, when Lehman collapsed and the crisis started, we also had a lot of other problems, fragmentation, banks were not borrowing to each other, then the cost of the financing of banks in different jurisdictions, even though we have a single monetary policy, was different, and this is something the ECB cannot afford, because if we have a monetary policy, financing cost must be same or relatively aligned across all the euro area. And then we also said that we had to do something in that area. Here, what we did is to start to collect information from the money markets, the repo market, and the derivatives data. So these statistics say that it's a collection of information, daily information that we collect from all money market segments from 74 major banks in the euro area. And then we have two complementary collections. So for the secure, for the repo, and for the swaps and overnight, we have these two other collections where we collect with 3 days delay all the transactions. So not just from the 74 major banks, but from all the participants in the market. This has also permitted us to answer information of the type of, see what's going in the markets. For example, you see in the markets very clearly, I don't know what's the case in Chile, maybe you were not affected, but in Europe, certainly the repo market has been growing enormously since the financial crisis, and the unsecured market, where the people borrow money without any collateral in exchange, has been declining. And also, we see that there's a concentration in the markets in the short-term terms, so more in the overnight transactions. Also, with the information of the daily markets, it permitted us to construct, when the LIBOR crisis came, and our rate at that time, EONIA, which was the rate, the benchmark rate that we were monitoring as our short-term benchmark, was declining. We were able to create our own substitute, Esther, which entered into force in 2019. So from there, you can see the green line is how we steer the rates. As I said before, for a central bank, what is important is not just to decide in a rate and sit down in the sofa and wait what happens. No, you have to make sure that the short-term rates in the market are following the policy rate that you're establishing. Otherwise, you are done as a central banker. And there you see how, exactly as I said in the beginning, we have the corridor system where the rate that we were fixing was the yellow line, the main refinancing operations rate, and then EONIA was following it nicely. Then, of course, the crisis came. The bank floods with liquidity through fixed allotment, full rate, all the money the banks needed, so a demand-driven force. So we asked the banks how much money you need, demand, and then we give you all the money. Then we went to a lower bound where the blue line, the deposit facility rate, became our reference rate, but still we need to monitor that the green line, in that case now the Esther, is nicely aligned to it. Then when we flooded it with the asset quality purchases, as from 2015, more or less, and then with the pandemic, where we started to buy massively securities, we moved to what is called a supply-driven force. So it's no longer that we ask the banks how much liquidity they want, but it's that we decide how many assets we purchase, and we put all this money in the system to float the liquidity. And the future system, as I said, may follow one or the other. Here, just also another pieces of information where we can see from the information that we have now very granular, whether there's exactly, this is the spread between our policy official rate and the Euro short-term rate, so the markets in the market, so we can monitor whether there are peaks, and then that gives us a signal, okay, maybe there's fragmentation, maybe there's something going on, we need to intervene. Or in the repo market, because unfortunately the Euro area, the Eurozone has not a fiscal union and has not a safe asset as such, you have the repo to be traded against the government securities of each of the countries. And then you see that the financing cost of the operations depends very much whether you're bringing German collateral or Spanish collateral or French collateral. Not now, I think now the gap is closing, but there have been cases during the crisis when this happens. And this is a problem because, of course, you have a monetary union, but what happens if your companies in your country need to be financed at much higher cost than the companies in a neighboring country? This is not something the ECB would like to see. And the OIS also help us. The OIS is the overnight index swap. This we have daily information and allows us, we have found out that this is the best predictor of what the market thinks the ECB is going to do with the rates. So you can see in the OIS what the market is thinking, how you will take the decisions on interest rate. It's nothing that then we need to follow it, but at least it's good to know when you take a decision whether you're going to surprise the market or whether the market is prepared. And these things, I think, are important to evaluate before you get everybody by surprise, and you may create also an unintentional shock on that. That's it. I think I know I've gone a bit over time. Sorry for that. In the future, what we are going is we are going to move more in this direction of granular. So we are going to collect now granular data on loans from the banks, not only for legal companies, as we have now, but also for natural persons. We will take even more attributes in every loan, so information also on commercial real estate or for sustainability purposes. And also the future, as we see it, that is that we try to then produce the aggregate statistics more and more from our adding up granular data. I think this is the future, permits also to integrate the collection on, or maybe decommission information that is collected in supervisory grounds, because if you have all the loans provided by the banks, you can compute both statistical indicators but also supervisory indicators, and then maybe with that we can even relieve the banks from some cost. Sorry for the rush, and I hope it was clear. Thank you very much.